The Mortgage Word Guide. It's out right now on Amazon.com. Today's video is a breakdown from that ebook that's available for just $5. And it does break down different mortgage terms to simplify things. That way you can be an informed homeowner and you can know all the ins and outs and don't feel overwhelmed or intimidated by any of the words that your realtor or mortgage professional may be saying. And it can help as a guide when you're looking to get pre-approved or pre-qualified for a home. And like I said, if you've ever heard content creators, mortgage professionals, or realtors use words that are over your head, it can be a bit intimidating and even to a point of overwhelming when you're looking to see if you even qualify to buy a home. So I hope today's video does help simplify that a bit for you so you can be an informed buyer. Because let's face it, we are in some challenging times. However, home ownership is still a goal for many people out there. Many Americans out there are still looking to own a home. And I'm hoping that this will be a constructive way to simplify things a bit. Like I said, you can purchase the Mortgage Word Guide. It's out on Amazon.com. And it's a part of the Brick by Brick, the Ultimate Mortgage Playbook series, where I do go through simplifying things in the home buying and refinancing process. So stay tuned, buckle up. You're going to enjoy the journey. I hope that this simplifies things a bit. Let me know in the comment section if it does help at all, because the goal is to be constructive, as this is the Constructive House channel. Alrighty, so adjustable rate mortgage. I'm sure some of you may have heard of that before. An adjustable rate mortgage is a loan that's fixed for an initial period of time or a set period of time, typically 5 years, 7 years, or 10 years. And then the remaining term of that loan, the interest rate can adjust up or down. So say you have a loan that's a 5/1 adjustable rate mortgage, 5/1 ARM. So that means it'll be fixed for 5 years. And then after that, you have 25 years left to pay it once a year, every year for that remaining 25 years. The loan can go up or down by a percentage points. Well, not by a percentage point, but it can be any percentage point. But it's only going to change once a year, and that's up or down. In some cases, it's up, some cases, it's down. Homeowners who typically take advantage of an adjustable rate mortgage are those who may move a lot. Say you're in the military and you have to relocate a lot, or say you have, a big CEO job, executive job, and they have you moving across country a lot of times. Say you're not going to be in a home more than 10 years, you may get a 10-year 10/1 ARM because it'll be fixed for 10 years and then adjust after that. But you're not going to be in the home longer than that. So you'll take advantage of that because the interest rates on an ARM are typically and traditionally have been lower than the fixed rate interest rates. And the cost can be lower as well. So that's why some may take advantage of that. Doesn't necessarily mean that that'll be the best loan for you. But if you are someone who travels a lot, I would encourage you to ask your mortgage professional to give you a breakdown on some of their adjustable rate mortgages because it may be a benefit to you. But keep in mind, it's a loan where the interest rate can adjust up or down after that fixed period. That's the main thing you want to keep in mind when it pertains to adjustable rate mortgage. The name is kind of defining what it is, but just to simplify things a bit, adjustable rate mortgage. All right, amortization. Amortization may sound like a very complicated and complex word, but I'll assure you it's not. It's literally just breaking down your loan amount that you borrow into small payments that pay both the principal amount, that's the amount you borrowed, as well as the interest, which is the fee that you owe the bank for allowing you to borrow said money. So it's just breaking it down into small payments. If you have a 30-year fixed mortgage, it's amortized, your payments are amortized or broken down over 30 years to ensure that you've paid both the amount you borrowed and the interest, which is the fee that you owe the bank for letting you borrow it. Simple enough. It's just your monthly payments broken down over whatever term that mortgage is. That's amortization. All right, appraisal. I'm sure you all have heard about that. I'm sure you're familiar with the word. I'm not sure if you know in detail what it means, but simply put, an appraisal is a process to determine the value of the home. So there will be an inspection done, and it'll go over the specifics of the home. You know, the square footage, how many garages you have, the specifics on the kitchen, and the number of bedrooms. And what'll happen is a certified appraiser will compare that to similar homes of similar size and amenities and similar purchase prices to estimate a value or certify a value of what your home is. So an appraisal, just simply put, is a way to determine the value of your home. That's what it is. Think of it as if you were going to the pawn shop to check the amount of the value of a gold watch that you have. Maybe it's an antique and you want to see how much it's worth. They would do an appraisal. The same concept is for a home. They'll appraise it to determine the value of it. For a bank, they want to make sure you have as much equity, which is the ownership that you have in the home, as possible. Typically, they want 20% or more equity ownership as it pertains to the amount that you're borrowing. The more equity you have in the home, the bank deems you less riskier. The less equity or ownership you have in the home, the bank will deem you as more risky, a riskier borrower. So keep that in mind. That is why an appraisal is important. It determines how much ownership you do have in your home. And it benefits you to know, because if you have less equity in the home, if you do need to refinance or take any loan out against the home down the road, you may not have as many options because you don't have as much ownership. So that's an appraisal straightforward. It's just a way to determine the value of the home, which will notify you and the banker lender how much ownership you have when the loan closes. All right, appraiser. We just kind of went over that already, but an appraiser is a certified professional who determines the value of the home. They do the inspection and they go over all the similar homes of similar size and recent sales in the area to determine how much your home is valued at. An appraiser is someone who has to be licensed. It may be through the VA, FHA, USDA, or through Fannie or Freddie Mac. But they must be certified. They can't come from you as the borrower. They have to be a non-biased party. That way, you know that you're getting a fair shake. All right. So an appraiser, they just do an inspect. They're the ones who do the inspection on the home. They're the ones who determine what your home is worth, what the value of your home is. They're like a detective, if you will. All righty. Assets. Assets are things that you own that have value. That can be your car, that can be your house, that can be your checking savings, stocks, retirement, anything that you own that has value. That's an asset. So, say you have a car and it doesn't have a note on it, it doesn't have a loan at all, and you take it to the dealer or whomever and they appraise it and say, all right, you have 5,000, this car is worth $5,000. All right, well, your car is a $5,000 asset. If you have several cars and say you have a couple worth that, you can cash those out, and now you do have some funds for a down payment or to pay your closing costs. It's not the most ideal way to go about things, but it is a way to think outside of the box. If you are looking to use any of your assets for qualification on your mortgage. Um, I know retirement would work the same way. Stocks and bonds, they work the same way, but those are assets. Anything that you own that is of value is an asset to you. So again, the constructive house channel is here to ensure that we're being constructive and informing you on the perfect way to make an informed decision when you're buying your home. Stay tuned. We will be going over a lot of different things on the general mortgage knowledge side of things. And don't forget, we do have the brick by brick, the ultimate mortgage playbook available on Amazon. Please, if you haven't already, get you a copy of the Mortgage Word Guide. It'll simplify things for you and help you be an informed consumer. I hope you found this constructive, and I hope I am doing my part as a mortgage professional and informing all of my potential buyers out there.